Hey, what's up guys? Dennis here. And if you don't already know me, my name is Dennis Sepulveda. I'm a real estate agent servicing the Greater Vancouver area. And if you ever have questions about buying or selling in Greater Vancouver, feel free to reach out to me anytime. I'm always happy to chat and answer any questions that you might have. But today we're going to talk about the current state of affairs in the market and sort of what's happening out there and what's been happening in the past and where we might be heading in the future. So we just got the latest stats in from the Real Estate Board of Greater Vancouver Realtors, and the headline says buyer demand surges in October. Now, I think that headline's a little bit misleading because it kind of gives you an indication that we're in some heavy seller's market right now, which is not the case. We're actually in a balanced market right now. But yes, we did see an influx of buyers last month. The problem was that the previous couple months, the market was pretty much at a standstill. So I think around July, August, September, very little sales out there. There was a lot of buyers waiting on the sidelines. But now interest rates have started to come down and now they're coming out of the woodwork and we're seeing more buyers out there. So yes, we did see a surge in sales of 30% year over year last month, but we're still 5.5% below the 10-year seasonal sales average for sales for October. So even though there's more buyers, we're still below where we should be right now. And of course, you have to look at new buyers in relation to inventory, new inventory and total inventories, because it's all relative. So newly listed homes are actually up 17% from last year, and newly listed homes are 20% above the 10-year seasonal sales average. So we're seeing a much bigger increase in sales than we are buyers. And if we look at the total number of properties year over year, we're 25% up and we're 26% above the 10-year sales average for total listings. So again, we're seeing a lot more listings out there than we are buyers. So the buyer surge is a little bit misleading, as I said, because there is also an inventory surge. That should have been the headline because there's a lot more inventory out there than previously. Now, across all property types, the sales to active listing ratio is currently sitting at 18%, which means, as I said before, we're in a balanced market. Now, a balanced market is great for buyers and sellers. I love balanced markets. It's especially good if you're looking to do a lateral move, meaning you want to sell and buy in the same market. Now is the time to do it before we get into a crazy seller's market and you've got multiple offers and you're competing. Now, as far as prices go, year over year, we're actually down 2%. That's very rare in Vancouver. Generally, we go up about 10% every year. So being down 2% year over year is pretty unusual. And I think a lot of that has to do with the interest rates and the fact that the market came to a standstill for about 3 months there. But I don't think that's going to last long. So let me show you guys a few graphs just to sort of explain and help illustrate my point. This graph is the Bank of Canada's overnight rate versus inflation rate. So this one goes back to 2017, 2018, and then you see at 2020 when the pandemic hit, we saw a massive spike in inflation. We went from, actually we were -0 all the way up to 8% in a really short amount of time. And of course, if you look at the blue line, that's the Bank of Canada interest rate. They had to increase the interest rate to bring that inflation under control. And it had the desired effect. So if you look at the red line, you can see that inflation has dropped and they are down currently as of October 15th, 2024, sitting at 1.6%. And then correspondingly, the interest rates have started to come down. So we're currently sitting at 4.25%. So here's another graph of the consumer price inflation, or the CPI. Now the target for Canada is between 1 and 3%. So we want to be below 3%, but sort of above 1. And they've been able to hold that target pretty consistently going back to 2010. And as you can see now, we are well within that range. So we should see interest rates start to come down because they've already gotten inflation under control. Now here's one more graph. This is the cumulative population growth by decade, and this is for Canada. So and this is a little bit hard to read. I can send it to you guys directly if anybody wants to see this, or you can just hit pause and have a look at it. But essentially what we're looking at here is population growth over time going back to 1960. So going back to 1960, we've had the same rate of growth between 1960 all the way to 2020. But in 2020, we saw an aggressive increase to Canadian immigration, and we started to deviate from this normal curve. and we're seeing a massive influx in our population. So as you know, Canada, it's a big country, but there's really only a couple places where people really want to live, and that's Toronto and Vancouver. So you can bet a lot of these newcomers to Canada are going to be moving to Vancouver and Toronto, and for sure that's going to have an impact on prices over time. So I'll let you make your own mind onto what these graphs mean, but if I was a betting man, I would bet that prices are going to go up as interest rates start to come down, especially given that we're seeing such an increase in population in Canada. So there you go, you guys. There's the numbers. I hope that makes sense. And of course, if you have questions or you want me to go over the numbers to see what they mean for you specifically, feel free to reach out to me anytime. And thanks very much, and I hope you have a great day. Bye-bye.